Hello and welcome to another episode of Property Ponderings, the podcast where we dig deep into the world of property buying, selling and renovating, giving you property advice to ponder. My name's Craig Nichol, your host. I'm a licensed real estate agent in Melbourne, Australia, with over 15 years of property experience as an agency owner, property investor, renovator, town planner, salesperson, auctioneer and buyer's agent. I want you to make better property buying, selling and renovating decisions to build the future that you are chasing. Today's episode is all about New Year's resolutions that might actually work against your goal of building wealth through property. While it's great to set ambitious goals for the year, some resolutions can unwittingly derail your property investment and wealth building strategies. By the end of our chat, you'll understand which common resolutions to rethink or reframe, ensuring that you stay on track to grow your property portfolio and financial future. So let's dive in and make sure your 2025 resolutions are aligned with your property goals. So the first New Year's resolution that's working against building wealth through property is, I'll save money by cutting out professional advice. It's tempting to save money by DIYing your property journey, but skipping professional advice often costs you in the long run. For example, buyer's agents have access to off-market opportunities and can save you thousands by negotiating on your behalf. Town planners help you understand zoning changes or development opportunities that could drastically increase a property's value. Mortgage brokers can find you competitive rates and structure loans to maximize borrowing capacity. And using properly skilled tradesmen can save you thousands on mistakes and also finishing your project to a higher quality. In a market like Melbourne's, where properties are still recovering from the pandemic fluctuations in the last few years of interest rate rises, having experts in your corner can uncover opportunities or prevent costly mistakes. According to SQM research, suburbs with the right zoning or redevelopment potential can outperform market averages by as much as 20% over 5 years. So you want to make sure that you're buying the right sort of property. So instead of cutting out advice this year, resolve to evaluate the right experts for your needs and budget accordingly. Number 2, I'll only buy when the market drops. This resolution assumes that you can predict the market, which even seasoned investors rarely do accurately. Waiting for a significant downturn may lead to missed opportunities. For example, in Domain's property market report, it showed that while some areas experienced price corrections, others rebounded strongly in the latter half of the year. How do you go about trying to work out which ones are going to bounce and which ones are going backwards? Meanwhile, interest rates may not stay elevated indefinitely, and future rate cuts could spur price growth sooner than expected. So rather than waiting, focus on finding value in the current market by identifying properties with long-term growth potential or strong rental yields. Time in the market usually outperforms timing the market. The third resolution that you want to avoid: I'll invest after I finish paying off personal debt. Whilst being debt-free is a great goal, it might delay your entry into the property market unnecessarily. And not all debt is created equal. Credit card debt or high-interest personal loans should be tackled first. However, using equity from an existing property or leveraging a low-interest investment loan could accelerate your wealth building. The Australian Bureau of Statistics highlights that households with property investments tend to have a higher net wealth than those without, largely due to the compounding effects of capital growth over time. Delaying investment to pay off every dollar of personal debt may cost you years of potential growth. The fourth New Year's resolution to avoid is saying, I'll prioritize lifestyle over investment goals. New Year's resolutions often revolve around lifestyle improvements, like upgrading to a bigger home or indulging in frequent travel. While lifestyle is important, prioritizing it over your investment strategy can set you back. For example, purchasing a luxury property might seem appealing, but it often generates lower rental yields and slower capital growth compared to investment-focused properties that may be in an area with higher yields to be able to hold the property for longer term, but also provide more capital growth over that long term. So instead of choosing one over the other, look for a balance. Perhaps a more modest lifestyle upgrade or a split-focus investment property could meet both your goals. Research by RP Data suggests that properties in dual-purpose developments offering both lifestyle appeal and strong investment fundamentals perform well in balanced portfolios. So remember not to prioritize your lifestyle over your investment goals. Otherwise, understand that you are working against your investment for the long term. and your wealth creation for the long term. Number 5, I'll sell underperforming properties too quickly. It's natural to want to cut losses when a property doesn't meet your initial expectations, but selling prematurely can lock in losses and eliminate the chance for recovery. Realestate.com.au data shows that properties in gentrifying suburbs often underperform for the first few years, but later experience exponential growth as infrastructure and amenities catch up. Instead of selling immediately, reevaluate your property's potential. If it ticks all the boxes to be fundamentally in the right location and the right property for your long-term investment goals, then don't be in a rush to sell it for your New Year's resolution. Could a renovation improve the rental yield if that's something that's a bit tight? Or is the area slated for infrastructure upgrades that could improve the price of your property dramatically? Just remember, sometimes patience pays off. So there you go, 5 New Year's resolutions that could work against building wealth through property for your 2025. So to wrap up here, I've got a few positive resolutions that will help you build wealth through property this year. Firstly, I'll review my property portfolio quarterly. Keep track of your rental yields, your market trends, and financing options. Number 2, I'll focus on education. Attend seminars. Follow property market updates and build your knowledge. Number 3, I'll keep building my network, connect with investors, agents, and advisors for fresh insights that will help you build your portfolio and get better with property. Number 4, I'll prioritize cash flow. With rising interest rates, positive or neutral cash flow investments can safeguard your portfolio. If you're not already feeling that pain, this year could be a switch up for you to get really focused on that cash flow and safeguard it for the future. Number 5, and the final resolution that you should be looking into, is investing in yourself. Whether it's understanding financial modeling or improving negotiation skills, personal development can yield tangible returns for you. Okay, so that ends another episode of Property Ponderings. I hope this has given you a few small tips to identify for the New Year's resolutions to ensure they're not working against your property goals and how to reframe them for success. If you want to discuss anything further from this podcast, or if you're seeking tailored advice for buying, selling, or renovating, feel free to contact me on 0400 122 081. Let's make 2024 a year of smart property decisions. We'll chat again soon. The information provided in this podcast is for general information purposes only and does not constitute financial, legal, or investment advice. While every effort is made to ensure the information shared is accurate and up to date, it may not apply to your specific circumstances. Listeners are advised to seek independent professional advice tailored to their personal situation before making any property, financial, or investment decisions. Nichol Buyer Advisory and Craig Nichol disclaim all liability for any decisions made based on the information discussed in this podcast. Property markets are dynamic and outcomes can vary depending on factors such as location, timing, and economic conditions. Always conduct thorough research and consult with trusted professionals before taking action. By listening to this podcast, you acknowledge and accept this disclaimer.